Hello traders, welcome back to Simply Forex. Welcome to the Sit on Your Hands podcast. As you can see today, we are joined by Patrick Reid. Patrick is a currency expert with over 15 years experience in trading FX and prop desks. He is a guest lecturer at the University of Cambridge and is the co-founder of the Adamis Principal, which mentors traders at all levels. He's also mentored clients such as Goldman Sachs, JP Morgan, and Credit Suisse. So really looking forward to having him on the show. Hello, Patrick. How are you?
I'm very well. Thanks, Tom, for giving me this opportunity to be on your show. Very excited. And it's good to be here.
Good. Brilliant, Patrick. Lovely to have you. And welcome to our podcast. So I'll give you a brief introductory there, Patrick, but rather than me, talk about you, let you talk about you. So if you could just give us sort of a brief background, how you got into trading and this finance world and what you've done over the years and what you're doing now, really, Patrick. So a bit of a broad background.
Yeah, thanks, Tom. I guess I've always, I wasn't born a trader. I got into it quite late, about 38 years old. What happened with me is I was in a career, I was doing well for myself. And I kind of had this epiphany, if you will, where I saw my future in the same company I was with. And I didn't really like the look of it.
Yeah, and as a lot of people do, I'm sure.
Yeah, and the annoying thing is it paid okay, Yeah. So I was like, look, my, single, no kids at the time, and I was like, look, I've got my life is not a dress rehearsal. It's a one-time experience, and I was like, look, what am I going to do? How am I going to find my purpose? And obviously, I love Wall Street and a lot of the Hollywood films and all that stuff. And it was in that week where I had met someone who was about to retire, and he said, "Look, just follow your dream, follow whatever that is, make mistakes, fail forward, and all that good stuff." And then I met a huge prop desk trader for dinner within that week. And we just hit it off, and I said, "Look, can you take me through what you do?" Took me to his desk and saw all of his traders. He was in charge of about 200 traders, futures traders worldwide. It was on Old Broad Street in the old NatWest Tower, Tower 42. And I walked in and I heard the noise and the screens and the squawk boxes and the kind of the energy, and I was like, sign me up. I really give me this, right? So we went for dinner. He took me out for dinner. It was a really nice restaurant, actually. I think it was called Rocker. So we went there, and it was beautiful. And I was like, and he said, "You know what you're letting yourself in for?" And I was like, "Yes," and I didn't.
No.
So I just said yes. So basically what happened, I left a pretty comfortable job and started the apprentice, 1 year apprentice as a futures trader. And that was it. I arrived. I got my best suit I bought, realized it was a little bit too tight for me. I walked in,
your Wall Street suit.
T-shirt. Yeah, I was like, should I wear red braces?
Yes, you were looking like Gordon Gekko.
I was like, that was my image, and I was like, maybe the red braces a bit too much. But I did go to Christian Dior and get a black suit that didn't fit me that well, and I walked in day one, and everyone's wearing jeans and t-shirts. So I was like, oh, okay, that was wrong. So yeah, so I rectified that on day two. But I loved it. I loved it from day one. I was in there early. I left late, and I learned.
How long did it take you to get up to speed then, Patrick? It was a totally new world to you. You'd come into this foreign environment, although you loved the energy, but obviously trading, as all our viewers know, is not an easy thing to, to master. How long did it take you to get up to speed on your futures desk, and what was that first year like?
Brutal. Yeah, it was absolutely brutal. I discovered more types of pain you can possibly imagine, and it took me a year. But what they say is, if you can survive your first year trading at an institutional level, then you'll do well. And my second year I did very well. And then I got poached to trade spot for a small prime broker, hedge fund, if you will. And that's when the doors really opened, because I started to be mentored by spot traders that had headed up tier one banks like JP Morgan, Goldman Sachs, Credit Suisse, UBS, stuff like this, right? So that's when I started to look at everything, and then that really grew from a base to even bigger base. But yeah, it took me about 12 months, but I survived those 12 months, and every day was different,
Sure.
And I learned.
And that environment, Patrick, is it quite cutthroat, as in each trader's out for themselves, or is it quite a supportive environment? You get help and people want you to succeed.
It's very, very supportive, because trading's a very lonely job. So it's you and your P&L. So there's no kind of like politics or backstabbing. It's you and your P&L. If your P&L fails, you're out. Because you can't pay your rent on the desk, you don't get your profit split. That's what a local is in the futures. You're basically, you rent the desk, you get ushered in or vouched in, and it's you with the exchanges, direct access to exchanges, and it's a brutal job. So every trader there who is a local, it may be backed themselves or maybe backed by somebody else, knows how tough it is. So everyone's really nice and supportive. It's not to say they don't like, the head of the desk doesn't give you tough love, because that's normal. It sharpens you up. But yeah, there's none of that kind of snidey, backstabbing politics, favoritism, and all that stuff. It's basically everyone wants you to do well, because everyone makes money out of it on the prop desk itself. So and they just know how hard it is. I have to say that, with sell side, i.e. banks, with hedge funds, with quant shops, every structure it can have, it is different. I'm only telling you my experience, basically, on the desk.
Sure. And for the viewers, just so they can understand a prop desk, what's the idea of a prop desk, Patrick? You come into this company, what are you told? What are the goals? What do they want you to achieve?
So essentially, you come in, you can't really get a job in a prop desk. Now, there are loads of retail prop desks around there, and they're pretty much like brokers, like FTMO or one of these companies that give you this competition, and you're on a prop desk. Well, a real prop desk is generally futures, and they take proprietary risk, and you trade direct through the exchanges. And essentially, when you arrive, you go through all the kind of compliance checks. You can't really get a prop desk seat without being a professional trader. So that's a bit of a catch-22, which is kind of what we help people with. So more about that later. But the idea is, you walk in day one, you do all your compliance. You're under the FCA within the prop desk structure. You get given a funded account. That's your money, or the prop desk money, or somebody will back you. You have a mentor who will back you. You rent the desk with the infrastructure, which is Bloomberg feeds, exchange fees, and all of that infrastructure with all your screens. You usually get between 6 and 8 screens. You get access direct to the exchanges like CME, UX, CBOE, ICE, and then you trade on these things called ladders. And you trade data, you get score boxes, and you essentially set your own hours, so you can go in when and where you want. If you don't turn up for work, you won't get paid, right? So you've got to pay your rent, which can range from £800 a month to £3,500 a month with all the bells and whistles, and you get a profit split. So 80%, usually it's 80-20 or 90-10 if you're a really experienced trader. You get the lion's share of that profit on the money you make, essentially. Many prop desks, a few do a salary-based thing, but you don't get any upside on if you have a really good week. And essentially, your job is to maintain your capital account and also take part of the opportunities presented to you, whether technicals, macro trading, and all the rest of it. So it's a very much it is brutal and it's lonely, but it's very liberating. You know, you set your own. You can do it sometimes remotely, but you're usually in a pod of like 12. And there's like the pit, basically, and it's basically a replication of the old pit, the old floor traders with the jacket, all that stuff. So that's many of those, if not all of them, are closed. Life, which is the London futures exchange, that closed, but many of those guys moved to the screens as well, and essentially there are variations to that, but that is what your archetypal prop desk in a situation is.
Sure. Okay. Yeah. Really interesting. Yeah. Thanks for sharing that, Patrick. Yeah. And so basically, the break even, if you're renting a desk for £800 or £800 or 3,500, that's your break even point, and then anything you make on top of that. And speaking of money you make, what kind of money are these futures desks, these prop desks? What did you see some people pulling in, or what's typical for a prop desk and the money it would make monthly or yearly?
Yeah, I mean, in general terms, I'm not going into specifics of what I saw with names attached, but in general terms, what as a rookie, you're looking to make between 20 and 30k a month as a futures trader. That can go up to 50 to 60 a month. I've seen 7-figure days. That's not unusual. I've seen 8-figure years. That's not unusual, and much more as well. So that gives you a kind of ballpark. If you're not pulling in minimum 20k a month, then you need to be in a different job, and really you're in the environment that enables you to do that. Essentially, one of the things why you pay your rent and you get access to, you're trading against banks, hedge funds, CTA funds, prop desks, locals, is you get direct access to those exchanges, which mean excellent pricing, liquidity, and all of the products like interest rates, commodities, FX, equities, indices. So you get access to all of that, and then obviously the Bloomberg and the feeds as well. So yeah, you're really, what I would say is, if you do get the chance to do that, you need to be on, it's a big seat to sit on, and you're against the big boys. You're trading with the big boys, and it's essentially, you need to be a very good manager of risk. Now, what you'll find, there are 3 major prop desks in London, and most of them are the same. But what you'll find is, when you get into this situation, into this setup, you get limits, right? That's why you're there. That's why you pay your desk fee. But it's basically, you get liquidity to trade without any question, within reason. But you can trade some decent size because you're entrusted to manage your own risk. What that means is, if you blow up in one day, don't come crying to the prop desk. There's no kind of if you go to one of these retail brokers or whatever, you'll get a margin call fairly tight, and that will stop you from blowing up or whatever. But within that situation, it's like you're entrusted to manage your own risk. You're a professional, so that's really what you get. But that means if Jay Powell raises interest rates and the swap comes out, you can get on the move and buy dollar with as much size as you want within reason. But that's the key. That's the key difference between that and say retail prop desk.
Sure. And obviously, like you say, you're in a pit with maybe 12 other traders, and what do you think constituted a good trader, Patrick, on these prop desks? You guys were pulling in big figures, like you said, potentially 7 figures a month were not unheard of. And what is there, like a thread, a trait that runs through these traders, or a specific skill, or a mixture of both? What constitutes the best traders?
Each person I met, and I met a few, has an edge. They've got a certain quality that they do better than everyone else. So I would just say that the common theme is to turn up, have enough grit, and have a passion. The paradox really is I made a decision to make a lot of money, but what I realized is the guys my age, and I'm in my 50s, right? The guys my age who are really on the top of their game, they don't do it for the money at all. They do it because of the passion. If you do it for the passion, the money will always come. Sure. Because it just takes a gargantuan amount of grit and passion to research the subject. Markets change every day, and it's not just banging up a few charts. I had to learn macro, I had to learn rates, and above everything, good risk managers. But just to turn up, I know a guy. He's pretty average at macro, but he makes a lot of money and did really well for a couple of big banks because he's an amazing risk manager. Right. He's an amazing risk manager, and he's average at macro. Yeah. His charts stink.
Yeah.
But he makes consistent returns.
Yeah.
So those are the themes.
Tight control. Yeah.
Those are the qualities. Yeah.
Okay. All right. Interesting. So yeah, you were 38 when you sort of got into this proprietary trading, prop desks and futures, and you moved on to spot FX. And we'll be looking later on, guys, at some of Patrick's charts and what he looks for in terms of a trade. So stay tuned for that. We'll be looking at that later. And then how many years did you do that? And what have you moved into after that, Patrick? What led you, what did it lead you into, the futures desks?
So really, I guess, getting a chance to be a futures trader, and somebody's asked about mentoring. Yes, I do. We do that as a company. So we'll tell you about that later. But the key thing for me, the key opportunities that a futures desk offers is the chance to be an institutional trader, and it opens up. Some of the big futures traders there that I traded with went on to hedge funds. Some at Tudor, some at 0.72, a couple of Citadel and things like this. So basically, you really open up that door. So if you can, and you open up all the institutional products you can trade, like a PM. PM's a portfolio manager for those don't know. And what that means is you look at everything. And it's cyclical, it's circular rather. So it's like when I look at the market, I don't just look at dollar and risk. I look at rates, look at commodities, I look at the short end, I look at carry, emerging markets, I look at the correlations, I look at the subcomponents to macro, not just the hard data, but the soft data. And it's that level that you experience basically because you trade those products, and it really sets you on a different level to even if you're a currency trader. So then with that toolkit, you can then trade your own account. You can open up doors to some buy side shops like hedge funds and stuff like that, and it really does set you aside to be a lot more successful long term.
So that's a lot of data information to crunch to make a informed decision on the chart, which makes sense. It's a business decision. So it has to be so well informed. Would you say that's one of your biggest strengths, or that is just common practice?
On the institutional side is common practice. And what you'll find is always ask the why, right? So this morning when we did our live show on the Adamis Daily, it was like, okay, we have the Bank of Japan. Why did dollar yen go lower? At what point did it go lower? It was through the live presser. Were there any specific words used by you, Ada, in the live presser to make dollar yen go lower? And was that right or wrong? These are questions that institutional traders ask. Is that move overdone? You can see it testing up to that, those highs on the day. And getting on those moves and just having a full grounding in macro and central bank inner workings, you can make a really informed decision. Always ask the why. So we will say to our traders when we start mentoring them is, macro moves markets, but technicals define risk, and have that in your mind when you're doing it. And rates over macro, but risk over rates. Now that is another thing we always say. And if you just sort of go by those that's what I was taught by spot traders who had been in charge of the biggest banks in the world. So technicals are brilliant. You need both, right? You need macro and you need technicals. If you just go by one, it's just like trading with like one arm behind your back. So you definitely need two.
And what were those sayings again, Patrick, just for our viewers? So macro over...
So I remember myself. So rates over macro, and risk over rates.
Okay.
Right, and then the other thing is macro moves markets, and technicals define risk.
Because you're looking for like lows, highs on the technical to put your stop loss and things like that. Yeah. Okay. All right. Interesting. Brilliant. And so let's talk a little bit, Patrick, about so you've gathered all this experience and you was also mentoring clients like Goldman Sachs and JP Morgan and Credit Suisse. And this mentoring has led you to create the Adamis Principal. Okay, and if you could just tell us a little bit about that and where that stemmed from and why you've gone down that route.
Yeah, absolutely. So I head up the mentoring arm, and we really had a mission to provide people with what I experienced, because not everyone can break down those doors to trade at institutional level. And there's a lot of BS around. Everyone's an educator. Everyone's this kind of guru. And why we're different is we're institutional, but we have a leg in retail, one leg in institutions. So some of our clients are from the big shops, BlackRock, Nomura, JP Morgan, but they may have non-trading roles or they want to move into the front office. But we also help very passionate retail traders who want to make that jump. That's what I did. That's the opportunity that I was given, we want to give. And that's my mission really, is to break down those doors. The other thing we do is offer a sit down with a futures desk, which is what I was given, and that is, because you do our 1 year program, we have this trust with the leading futures desk to get your sit down, and that's priceless, because you can't walk in, you can't just join, because it's our reputation at stake as well. So we give you that, we offer that at the end as well. So really, and we're old fashioned. We did a big Christmas lunch for our clients. 12 came over, and we went to the Ivy in the city, and it was great.
Nice.
We're doing more macro events. Hopefully we're going to do an event in Dubai. We did have a client in Dubai, so that's good. But one of the other things, which two other things that makes us a bit different, is our institutional openings, but also the accessibility to us. So we do this live macro show every morning, the Adamis Daily for our clients, but I meet my clients. Like I travel on the train. I'm going to Edinburgh. I went up to Birmingham. I'm going to Amsterdam this weekend to meet a client. You know, I do this to meet them and have lunch and talk macro and talk shop. And they're like, are you really like that? But yes, I am. I love my clients. So 75% of our clients are still in touch, our old ones. So we really do love markets, and we really care for our clients.
Yeah, and just like you say that you have to have a passion. You know, like you said, if any of the futures desks, if the any of the traders were successful, you got to enjoy this crazy world of risk, looking at candlesticks, the macroeconomic view. And I also think the fact that it was in Amsterdam, Patrick, that helped. You were like, yeah, I'll definitely go.
Exactly. I know. Send out a search party if I don't come back.
Yeah. I got lost there. We won't go into that. That's a different podcast. Yeah.
Exactly.
All right, brilliant. So yeah, and we'll mention it now before we go into your for some more questions. But Patrick is going to do a free webinar, guys. So the webinar is how to become a proprietary trader at a big futures desk, and the Adamis Principal and how that can help you achieve this. All right, so if you're interested in that, guys, click the link below this vid. I think it's in a couple of days, Patrick, isn't it? The 25th?
Yeah. It's on
Thursday. So click that link, guys, if you'd like to know more about the mentoring, about proprietary desks, futures, etc. All right. So Patrick's got all the experience in the world, guys. So you can you're going to learn a lot. I just want to focus a little bit more on being in that hustle and bustle of a proprietary desks, 12 guys, trading big sums of money, risk. Have you ever seen traders sort of blow up, throw their PC out the window? Have you seen traders absolutely just lose it before?
Yeah. So I've smashed about countless keyboards, and they have a lot of prop desks have cupboards full of keyboards.
Right.
That's the truth. And it's normal for keyboards to get smashed up. It's normal for people to tear their hair out. You just have to kind of I think I've heard every swear word under the sun, and some I never thought existed.
A combination of swear words that never thought existed.
like real adjectives, long words, right? So you have to imagine I came in with a Guardian under my arm, ex-BBC, and I was into this kind of different environment. So it kind of, I had to change, right? I had to change
with your suit as well.
Yeah, exactly. So yeah, I mean, I've seen people get carted out. I've seen the tap on the shoulder from the risk manager. I've seen various things. I've seen people lose it on having a really good day. Right. And that is a danger, on itself. If you have an amazing day, I would say no other job in the world plays with your emotions as much as trading. Because
totally.
I do this on my LinkedIn blog sometimes, in that you can make 10 grand in one day and be gutted. You can lose 10 grand and be ecstatic. You can come home, you say hi to the wife and kids, you say, how was your day? And you say, I had an amazing day, I made nothing. And that would be amazing. You'd be like, oh, I'm so happy. Just because of what you had done before. So that there's no other job I know that gives you that, and that's that's probably best describes the situation. But to control the emotions, psychology is really important, and the more you do it, the easier it gets, really. And I remember my first big loss. I just got an arm around me and the comfort to say, look, it's just come back tomorrow. Tomorrow's another day. Take a few days off. And the I get the same treatment when you have, a really big day, because the worst thing is coming in thinking that you're God and you can smash it every day. No, you're not. The best laid plans sometimes fall awry, because the market has its own ideas and they might not agree with you, So it's all part of trading. It's all part of learning.
I couldn't agree with you more. Like, one of those days where all the trades go exactly as you planned, those days are easy. It's those days where you've fought tooth and nail with the market and you've been in perhaps a position offside and you've got it back to break even and you've made no money. Like you said, that's a win. That's your real successful day. Because when trading's going well and everything moves in your direction, it's easy. It's those days where you're fighting that market, and if you get it back to break even, a big win. And I'm just obviously I've been looking at your profile here, Patrick, as well. So you have regular meetings with Forex traders at the Bank of England for sort of research and academic discussions. What are they like? Are they all tearing their hair out as well, or are they very similar to the guys that you found at the prop desks? What sort of discussions you have with them? That'd be really interesting.
Yeah, I mean, Chris Mills, I met him a few times. He's no longer at the Bank of England, but I do make it my I do try and go there, and essentially something like a central bank. Bank trading is very different to prop trading. A lot of it is execution. They really they get the best price for their client. It depends, that's how it works, and that kind of changed in GFC in 2008. With regards to the Bank of England, that was probably one of my best days. It is the most amazing experience ever. Probably take me about 10 minutes to explain. I'll try and be quick, but you go in there with a passport. There's a guy in a top hat with a monocle, and you put your bag in. Literally, I've seen it. I honestly, you go into reception. There's marble staircases. There's Caravaggios. There's ancient Greek marble statues. There's all this stuff. And there's a big atrium that goes all the way up to the top, and it's all marble. But here's the best bit, right? There's the bank, but within the bank, and it's just like a normal NatWest bank. It's just a regular bank, but half of the Bank of England. So I said to my buddy, I said, what is that? He said, it's a bank. It's a bank. It's a working bank. It is, yeah. And there is a gold supply in the Bank of England, probably one of the largest in the world. I said, can I have a look at the gold? It's like, no.
Yeah, of course you can, sir. No problem. Here's the vault.
Yeah, you have to ask though. But if you YouTube it, you can see an interview with somebody within that vault in the Bank of England, the amount of gold bars in there is just staggering. But it was a wonderful experience. It's great.
I bet it is. Yeah. So I love the fact you get greeted by a guy with a top hat and a monocle. You've immediately arrived on a Monopoly board.
Yeah. Basically. Yeah.
Brilliant. And what kind, and the conversations you've had with some of the people in the Bank of England, what are you talking about in there?
Obviously, part of their role is to see what the market's feeling, and I guess at the time I was the market, and it's not really as custodians and fulfilling their mandates. They want to get a sense of the market, so that's part of their role, and also they had their ideas close to their chest, if you will, which is understandable. But it was just more of a kind of broad discussion of macro and where they saw dollar going, and where they saw, especially in the UK, the next government taking sterling and taking the macro picture and some of the risk events, really, how that can be kind of circumvented, and really they provide this stability, this backstop to you know, they're the buyers of the last resort in certain assets, and they're really there to kind of help. And I really got a sense of that, you know. And the other thing I would say is my experience with the central bank is they're just human, you know. They're not like geniuses, you know. They just want to do their best, and obviously they're incredibly smart, incredibly clever. Nonetheless, the market is the master, really, and they're to help, you know, markets run effectively and to support the mandates set by the government.
Yeah, no, really interesting, Patrick. I've got so many more things I want to ask you, but maybe, you know, you can come on another time, Patrick, because I know our viewers, really want to spend time on, you know, what you look for in sort of a trade setup and what you're looking for in terms of the charts, Patrick. But, you know, we'll have to have you on again, Patrick. I've got so many more questions, but for the time being, we'll take a look at the charts.
Great.
So yeah, Patrick, if you could share your charts, and we'll take a look at, you know, what you look for in a trade.
Yeah, I'm just going to share my screen.
Yeah, brilliant.
Go to window. Can you see that?
Yep. So yeah, your screen's popped up. Patrick, yeah, brilliant. Yeah, we can see that.
So really, I would say less is best. So here is my euro-dollar chart. I like to use fibs, but you can use anything you want, really. And really, I was taught by institutional technical guys. And, you know, always strip your chart back and then slowly add in technical indicators. That's what I would say. And obviously, I've set in a fib. Now, there's low to high, high to low. Some of it works, some of it doesn't. But at the moment, the way this price is moving, it's very choppy, and it's kind of how to respect this fib, but then chop through it. So I would say usually when I see that, I look on the daily. So the daily is a key level here that I look for, and I'm always cross-checking 4 hour with daily, and this is just my favorite time frame. So if you look here, all of last year we were pretty much ranging on euro dollar, and we're in, you know, ever since October into December, we had this you know, massive dollar weakness, and euro dollar just went higher and higher. We had that crazy two big figure move higher at Christmas time, a few days before Christmas. So that's kind of given up a bit, and we're at this kind of midpoint now at this 108.35. So I'm always looking for levels, and this is a pretty good level for me. It's 108.50. It's the 200 DMA, and at the moment below that it's 108.35. So I'm really looking at these lines in the sand to kind of add support. Now, I try not to predict. I just trade the level, and that's the futures in me.
Yeah.
And what I do is ask what the market is trying to tell me. How well is it trying to do? Is it failing to do that? Right. And I always throw in macro because it's really important. So at the moment, nothing really is going on. We've got some PMIs coming out in Europe tomorrow morning. Yeah. I'm looking for this blue line, which is the 200 DMA, to hold until then. And I see a bounce up to, say, 109.43 based on the macro. But I want to show you another chart on Aussie. Now, on Aussie dollar, you can really see some key ledging on the levels. That's a triple bottom here, 65.28. Then we have this little minor ledge, which is the fib at 65.71. Sure. And then above that is a previous low on the fib, which is 66.43. This is orderly. This is what you want to see. Ledging, robust support is resistance, resistance is support, and that's the kind of price action you can get your head around. It's good. But the interesting thing about Aussie I'm looking at is this 65.22 level. Now, we were ping-ponging between the 100 and 200 DMA. On the 65.22 level, that is a fib as well. It's a previous low and a previous high, as you can see. Yeah. Now, the key thing that makes this really compelling as a level is now we've chopped above and below that 65.85, so that's kind of gone. But Australian jobs were absolutely rotten, but it wasn't enough to take this through 65.22. That's a lot thrown at it. Right, so if you can't go down on good news, you have to go higher on if you can't go down on bad news, you have to go higher on good news, and that really sets the tone, along with another bit of great confluence, which is a kind of rumor, not really a rumor, but it's Chinese support on equities to the tune of $278 billion from the Chinese government to support China stocks, and Hang Seng and China stocks were up today around 3.5%. So that has a positive effect on Australian dollar as well,
because they have such tight economic ties.
And it's all about iron ore, basically. So, you know, any kind of discourse, any kind of handbags at dawn with lobsters, wine, education, forget that. It's all about iron ore. That is the key thing. That's not, if that changes, then Aussie dollar's going to fly. It's going to move real quick. So you see how I've chosen different confluence types. You know, you've got the macro, you've got the technicals, you've got multiple time frames, you've got levels, you've got DMA, but also you've got the fib, and then you've got the reaction function to all of that with those levels. So really, and obviously, I look at the 2-year on dollar as well, or interest rates on the treasury curve. I look to see that starting to peak a bit as well. So I'm looking for more upside on Aussie. We'll see. But really,
And from a technical point of view on this chart, you would like to take price, you know, because we've sort of broken out of that larger channel with that green line represents. We're bouncing off the 100 and 200 moving averages. I assume that's the purple and green moving average there. We've just popped above that green horizontal support resistance level. Would you expect it to get up to, you know, the next fib level or that next piece of resistance we can see on Aussie dollar, US dollar? Do you even think like that when it comes to technicals, or is it more macro led, you know?
Yeah, I do. Yeah, I do. I do have that view. That's my kind of opportunity in what I want to see is obviously that 65.85 has been waffling up and down. So that's not really a level. It's kind of dissolved into a nothing level, but previous remembered level. So you've got a lot of confluence. The 65.22 is the rock for me. But what I want to see is similar to euro dollar. You see that go through that fib and then it having a toe hold in it. I want to see that in the same on the daily. I want to see that 65.84 start to put that real nice bit of floor under it, and to close successfully above on the daily as well. The next kind of scalp to take for those bulls is that 66.41, which is that previous low. The ultimate target is 67.40, but we're not here yet. I need the market to tell me that we have closed above on this daily level, and then we can our bias is bullish. At the moment, we're still waiting.
And sort of a break and retest of that level, but it's not had a sustained break yet. You want to see a sustained break, then the retest.
Yeah, and if you go exactly, if you go closer, you can see it going above and below that level, and that to me is weak. It's not good. So I'm waiting for it to like go, look, hey guys, I've fallen in love with this level again, and at the moment it's going right through. It's taking out those weak longs, those weak stops around that 70. So I really do feel it's wait and see mode. If it got back down to 65.22, I'm definitely buying down there.
Okay. And also, because I know a lot of our viewers use fib levels, and if we look at your higher time frame chart, you know, you've plotted the low in October there and the high in April. Why have you chose those levels, Patrick? You know, why not a closer level on the fibs? You know, I'm just trying to understand why you've chose that high and that low.
It's $1 million question. It is great. I mean, I get out of all the questions from my mentees, this is the one that I get asked a lot. Okay, so I would say the rule that I have for fibs, I'm pretty good at fibs, but I'm not the oracle. Now, what I do is go from low to high, high to low. And not only that, but I look for a significant low to high or high to low. Now, that can be near term, long term, ages ago, like last night. It doesn't matter about the time frame. What I'm trying to do is to fit my fib around the market. So my job as a fib person, as I love fibs, is to guess if the market believes me and I'm in cohesion with that market. So what I do, and I'll show you how I do it. Let's just say I've got, here we go. So previously, my high was at this 80, the figure, back in 2021. And it worked for a while, it's fine. But then it stopped working. I was like, okay, I need to draw my fib, right? So what I do is, let's just strip this back for you to make it clean. I'm going to get rid of, this is what I really encourage traders to do as well. I'm going to get rid of some of my old levels so it looks a lot cleaner, just so the fib's there for you. Draw, first of all, strip everything back. Have a look at your naked charts. Brilliant. So have a look at peaks and troughs before you set your fib. Now, immediately, and have fun with it, right? So that was your COVID low. And there's your high. Now, try and work out if the market agreed with your fib, right? Now, I can only see that point. There's a few others, but it wasn't really great. And obviously, that to there didn't work that well.
No.
Right?
In current price,
So you've tried it and failed it at the current price. So then you go, okay, well, where's the next point? Okay, well, you could do that, but that's pretty juicy up there. And we go down to the low there. Have a look at that. Oh, looks a bit better.
Yeah.
Right? So you've got this here. You've got some nice little bounces off here. You've got that there. Obviously, it went through there. So it's not perfect up here, but recently, and then it's gone through there. So that's a potential.
Yeah.
Right? Let's take rid of that. Here's the other one. Now, there's another potential, but look, you've got a recent bounce at 65.22, and you've got these lovely little resistances here.
Yeah.
And this fib up here is just shy of this double top here.
Yeah.
So because you've got a double bottom down here, it's the most recent, that's the one I've chosen, basically.
Yeah. And the price is respecting those levels,
You fitted the fib around the market. And that's the key thing. You know, the guys, I know some very experienced technical technicians in banks. And, you know, they don't have this kind of, there's no kind of only one way to do it. It is subjective, and your job really is a guesstimator. So that's how I do it, and I have to say my fibs are pretty good. Yeah, but you know, that's it.
And once you've got your, you know, these are your higher time frame fibs, will you use, you know, what's kind of your entry time frame? Will you use like H4 fibs to enter? You know.
Yeah. So I use, usually my entry is 4 hour.
Okay.
But I do use daily sometimes, but I use, and I try, and sometimes you'll get a fib level on the daily that will join up with a 4-hour fib as well on a different ratio.
Yeah.
So it's great to have both together when that does
double
happen.
confluence.
Yes, exactly. Time frame confluence on the same indicator. But yeah, always look for different, all four corners of the earth, I say. So it's like, you don't just rely on technicals. Always look at, like with Aussie, the poor jobs didn't move it lower than 22. That there's China stimulus potentially lifting China risk. So that's supportive of Aussie. You look at the 2-year yield on the US side. You look at the fib. You look at the double bottom. So these are all different areas that you join your trade. That's pure confluence. And, it's a really underrated thing. And institutional traders, they only trade with confluence, pure confluence. They don't, a level's a level, obviously, but that's how they do it.
Sure. And just a couple of quick more questions. So we don't want to keep you for too much longer, Patrick. But with regards to how many setups would you get in a week or a month, and typically how long are you in a trade for?
It all depends on what the market presents to me. It's like somebody said, am I a swing trader or a day trader? Well, I'm just a trader. So generally I'll trade 3 to 5 times a week. Generally I'll close in the same day, but sometimes I'll leave them overnight. I'll job a trade and add to a position. I'll take away, have a call long or call short. Depends if I feel there's a strong macro reason to do that. And that's it really. I will just trade what's in front of me. Now, dollar has ranged last year, and I don't see any different really on a 30,000 feet view. So I trade the levels, and I play Q. I go against my macro view. At the moment, if you look at swaps and the cuts that are priced into the market, they're very similar on the US to the European side. And obviously, we've got the ECB meeting this week. It's a very hard trade to get any juice out of that, because both Ionia and overnight index swaps in the US side of Fed Fund futures, they're pricing very similar, around that 140, 130, 140 of cuts this year. So it'll be hard to buy or sell Eurodollar, but that's fine too. You know what you're dealing with. So, and that means you just trade the level and trade the range.
Brilliant. Well, Patrick, it's been brilliant having you on, Patrick. Really interesting, some great insights, into, what big boy trading on the proprietary desks, and, smashing keyboards, and the way you look at the market. And thank you very much for sharing all your experiences, Patrick. Guys, Thursday, Patrick is running a free webinar on how you guys can have a change of career and learn this proprietary trading and potentially trade at one of these desks. Okay, so if you're interested in that, guys, then please check out the link below this video. All right. And also, guys, if you've enjoyed our chat with Patrick, I certainly have, then please subscribe to the channel, smash that notification button, guys, and also smash the like button. Patrick, thank you very much. We'd love to have you on again. I've got loads more questions to ask you. So hopefully we'll see you again soon, Patrick.
Thanks a lot, Tom. Just a quick one. Somebody's asked about the COP report. Ignore it. That's too imam. It's very misleading, and I'll explain more about that in the free masterclass.
Okay.
On Thursday.
Yeah, brilliant. And is there any other questions you would like to take a look at there, Patrick, at all?
Jimmy, thanks so much for the talk. Really interesting. Thanks, Jimmy. I hope you sign up. Thanks, mate. And then Brett N, what is the Adamis Principal? I think we explained that. I use fundamentals and technicals, Brett. And CNIX, yes, we do offer mentoring. You can check me out on LinkedIn. I'll send the link, and also please do sign up for the free masterclass on Thursday at 2 p.m. Everything is in what what you have here. Okay, yeah, absolutely, Jude. Any questions? I blog every day on LinkedIn as well, so please do look at me. Patrick Reid, Adamis Principal. I answer all questions as well, but you can talk to me in person in a couple of days.
Brilliant. All right, that's brilliant, Patrick. Thank you very much for your time. Cheers, guys. See you later.
Thanks a lot.